Hello everyone,
Hi guys.
hope you're all well and have had a good start to your week.
So we wanted to trial something a bit different with our chart markups. So we wanted to do a video format. So this is what it's going to be. So let us know your thoughts on this, and then we'll continue to do these if you do enjoy them.
Exactly. So let's get straight into it. So we had our market open up on Sunday. The market traded through into London session. So that's what you see marked out with this blue background. Essentially, that is 7 o'clock till 10 o'clock UK time. And that's just showing the London session. So first of all, I came to the charts for the London session, and what I saw was that the market had moved down below these lows and below these relative equal lows over here, and looked like it grabbed liquidity and created a breaker structure. So that kind of built my narrative for what I was looking to play at that time. So heading up to my first trade, we could see that on a lower time frame, this 1 minute that we're on, we had this momentum shift. So we had this impulse, this A, B, C, D, sorry, start again, A to B, B to C, C to D. So we see that we've had this start of this momentum shift, and market has broken the most recent swing on the 1 minute, and continued higher and continued to break a higher time frame swing up here. So this is showing us that we've had a full structure shift essentially, and what it's telling me is that I can start looking for continuation trades. So as we started to break out, what I was doing was following the mitigations along. Here we see that we had a price broke this high, pulled back, mitigated, and then continued on to break this high. So ideal price delivery here. Price delivery here, what we're seeing is that sell to buy candle, sell to buy price delivery, and that move up, that pullback just before that breaker structure. So this is the OB that I was interested in playing. So I marked that out and I had 50%. For me, I was just happy with playing anything inside this this zone. So I saw price come down, tap 50%, and that's when I initiated my order. And as we can see, this is where the market tapped me in. Had a 1.5 pip stops on that one. And what I was doing for this trade is actually targeting this higher time frame point of interest, which we'll quickly zoom back and have a look at. So just follow this black line on the screen. Going back. How far? So into last week, the week before. So I'm sure all of you remember this price move that we've got here. So essentially what we have here is this range that was created. Market came up and then died essentially. So our POI that we had was up in here. So this, I wasn't too interested in the exact point. All I knew is that price wanted to move above this high, and this could be mitigating for a cause of lower prices. So that's the idea I had, and as we saw, get back to current price action. Keep on going, keep on going. We will get there.
Press that arrow at the bottom.
Yeah, it's going to take me back to most recent price though. Sorry about that, guys. So yeah, back into our trade. This was essentially my area of interest, and what essentially built my narrative for, essentially following and understanding these BFI footprints and initiations. So up in this box here, we see that we had a momentum shift, breaker structure, and continuation. Not the cleanest, but it is a valid momentum shift, and of course that gave cause for lower prices. So when we do get a higher time frame mitigation, more than likely price will come back to take out the most recent swing point, which in here is the swing low, and of course higher time frame mitigations. We're expecting price to continue. So yeah, so this was my first trade. Second trade, getting into that now. So we see that we had this liquidity in here that was created, and then we had this break of structure. So I was looking to continue price. Over here we had our swing low, which is essentially our higher time frame structure point, and we see how this was broken. It was broken quite aggressively. I think the key thing to note here is price delivery. Notice how, here's where we got that inefficient price delivery, and then in here we see that price remains efficient. When we create this sideways price delivery, we get that strong move through, which is again showing intention behind that move. So for me, adding this break of a swing low, high time frame swing low, plus a creation of inefficiency, this is kind of my go-to to look at 50% of that inefficient pricing. So just to go into show you a bit more detail on how I pulled my inefficiency, essentially what I was looking at was this low to this high that's created. And what we can see here is that price has come down, pulled up, price has come down, pulled up, and moved away. So for me, this is now a creation of confirmed inefficiency. So I was able to draw my inefficiency in like that, and I was looking to get in at 50%, which we see here. Zoom out so you can see the full picture. And then from here, I had to think about how I wanted to place my stop, because I've got it at, I'm pretty sure this was, let's double check, it looks like that's slightly moved. Yeah, let's call it 2 pips. So essentially my aim here was to refine my stop. I didn't want a stop that was above here. So it's, 3 pips, still relatively good, but I know, I've seen this price delivery many a times, and you are able to refine your stop. So what I tend to do is just take 50% of 50%. So this is the top part, this grey box is highlighting the top part of this 50% of this inefficiency that was delivered. And then essentially what I'm doing is taking 50% of that area and placing my stop just above. The idea here is that if price is going to get, if price is going to move up higher, we'll likely just continue. So I'm happy to play price in this way to get an optimal stop. And obviously from my experience, it does work out very well. So yes, so this was my first entry in here. And as we saw, that was quite nice that was set up for this trade, is that we had these stacking of lows close to each other. So we saw that we had liquidity being created. And the other thing, here we have a new low that was formed, and notice that this low does not go on to break any swing structure that's up here. So again, telling me that this is actually a weak low and it's likely to be taken in the future, and that's what we see. So price runs down, and then we can get to my next trade. So this was again a grab of liquidity. So this move down into this area. What I was expecting to see was some sort of reaction from here. So if we just go back, we can see that we've moved now below these lows and below this low. So for me, that was cause for higher prices. So what I wanted to see was that, ideal price delivery, essentially, that momentum shift, and this is what we get. So for those that don't see it, this is actually a low and this is a high. So this will be your range in a lower time frame, and what you see is created is this range. Inside this range is, well, it's not inside this range, but essentially delivery of this price is your sell to buy, and that's what we're looking at here. So this is seconds time frame, but we don't really need to go down to the second to see this range. we can see it being created here in the 1 minute. So this is your sell to buy, ideal price delivery range, you know, break of this lower time frame high, and it comes back to mitigate. So this was the idea here. If you notice that we didn't actually have any sort of swing structure break here, so this is giving me evidence that this is a low that is weak, but looking at how price delivered, I'm still happy to take my risk in this area. So yeah, 50% of this OB that was created here, this OB price delivery, and my entry was just above that 50% of optimal entry. And the idea with this trade was essentially I was looking for a hedge. So I was already short and I wanted to get long in this range that was essentially, I understood from this type of price delivery that was being created. So moving on, so yeah, that's this trade, and obviously that moves back up into these highs. Sorry guys, just quickly clean up my charts. So yeah, so that was that trade. You saw that we did get that follow through, right? So we have broken a high, so we're following the right intentions here. Of course, we can see though that we are range bound, so price running the lows or running the highs is, you know, essentially highly likely, and we at this point don't know which direction that's going to happen in yet. So happy just to hold these trades and see what happens, and continue to watch price delivery. So yeah, so after moving above this high, we see that the market continues in that original trade direction and following the intention of the BFI. So it's no surprise to see that move. We continue lower. So I just want to get into these sets of highs here. So we know that weak lows are essentially, you know, there's some characteristics that we can identify. I think the biggest one for me is understanding, one, you know, where has this mitigation happened? You know, what is the cause for this, you know, reaction? And two, do we break swing structure? So, you know, in this case here, we see that price does come, you know, create this high and then moves down and then comes back up and does break this high. But for me, you know, the swing high, if anything, is going to be somewhere in this region, right, the start of the range. If we're seeing highs in a range get broken, you know, I'm not going to, I mean, especially this type of price delivery, I don't really class that as anything. For me, it's just price moving inside the range. But what is significant here is that price does not break this range. Now price has moved into this, you know, what we see in this supply area, right, back into this inefficient pricing, we get this reaction. And again, once again, notice that this reaction causes a break of structure only slightly, and then it pulls right back again. So notice, once again, we don't break any swing structure. Now, look what we have here. We have all of these highs stacked together. What do we understand this to be? Right? Future liquidity. So already now that's giving me some sort of indication of what we could see in the future. Price continues lower and moves into this point of interest, which is, we'll just quickly scroll back, this OB price delivery. So this sell to buy. Notice that price comes back in, mitigates and takes off. We're essentially looking at the same form of mitigation, right? As in this, from that same zone. So here we've got relatively 50%. You see that price reacts here. So let's get into this now. So we have, let's delete this. We have price coming down, creating this structure and breaking previous highs. Now this isn't your most cleanest momentum shift, but what we can see is that we do get a reaction, right, a mitigation out of this range, right, another range formed, another mitigation. So when we're looking at this price delivery here, you can understand that this is your sell to buy, right, moving below the lows. you see price move higher in the sell to buy, and before it does that, after it creates this high, notice that we get the same type of range, right? That causes the breaker structure. So this for me now is, there was no evidence here of BFI initiation, but this is where we're starting to see it now. And again, this is our ideal price delivery. So this relatively is 50%. So you can see how I've drawn this zone essentially from this candle high, this candle low, and I'm looking to take a trade inside here, right? So we see that it barely touches 50. I saw it react, and obviously this was a trade I was trying to get involved in. So as it reacts, I place my trade, 2 pip stop. That's kind of my regular average stop loss. And when we zoom out and look at that price delivery, we can see how that these highs that were created on this move down acted as liquidity. That's how we had. That's why we have these these highs form here, taking out liquidity, and then that cause of higher prices allows price to pull back and be mitigated, and that's when we see that continuation. So once again, ideal price delivery here. Hope that's clear. Yeah, so that's the trade number 424. Yes. Next one is, so once again, so I'm at this point my short here is closed. So the only position I have on at the moment is long. So once again, understanding that we have this range type price delivery, I'm just happy to look for a short. So what do we get? So we get price move higher into, right, this initiation that we saw back here that created this whole move down. So my idea was that when price does return back to this zone, we're likely to see a reaction. So I'm happy to trade with that narrative, right? Continuation of that BFI selling. So we move above. Look how price shoots up after creating this low. Liquidity caused, moved higher, and then price completely breaks this low straight away. So here we see that we have that momentum shift, price breaks lower. What we expect now is essentially price to return to C, and that's what we get. So hopefully that's fairly simple, very standard trade. Here you might see my OB is drawn slightly different. If you was to take this buy to sell, notice that it's in the same relative area. What I tend to do is just look for any type of range bound or sideways price action, because that's essentially where BFIs are stacking. So that's why I was interested in this area. So yeah, just trying to essentially take that move back into that for that reaction. Again, knowing that we've had this initiation, the break of structure, when price does return here, we're likely to see a reaction. We've already seen one from this zone, and now we're likely to see another. So that price action turns into this. So notice how we range inside, price deliver sideways, but notice that we are creating these weak highs. Notice how no swing high is being taken here. So this is a nice understanding that this is now going to act as cause for lower prices, and that's the delivery we get. So yeah, that's so yeah, I was involved in this trade as well, but Burton's going to talk about this one in more detail. But yeah, that's a summary of my trades, fairly quick, but I just wanted to give you a different approach on how we're actually trying to read price action as it's printing, and being aware of what was created before and how it can be used in the future. What Burton's going to go through now, you're going to see why it's great to understand the full picture. Right? We don't have to leave the 1 minute. We can, but the key thing is here is that we understand what's happening. Hope that's clear, guys. Any questions? Just send me a timestamp of the video, and then I'm sure we can I can answer those questions for you. Over to Burton.
Cool. So this is the one. How'd you get onto the other thing as well?
Put it over. Oh, wrong one.
Cool. So this is when I got back to the chart and was actually looking. Obviously, everything Chucks has said before has built a narrative for higher prices. So obviously we've got that liquidity that's stacked above here now. So we know that price is going to target this liquidity. So that give us cause to move higher. And then obviously we had this momentum shift lower down here. And then structure has remained bullish the whole way up. Nothing's changed. Structures remain bullish. And then I was just following the mitigations, which you'll see is the yellow boxes. So this is the first time that I saw this. This is the first time that I saw the mitigation. So again, sell to buy price delivery. Price came back into it here, and I can see this whole sell to buy caused the breaker structure high. So I know that's a strong low. And then again, mitigation. Sorry, my drawing's a bit shit. Again, yeah, that's probably better. That's better. So then we get a mitigation here. Sell to buy. It's very, very small. Let me zoom in so I can show you this. This is a very small sell to buy here, but again, it is a mitigation here. You see sell to buy, create liquidity. This will be on a seconds time frame. Mitigate and then continue higher. So then this is the last place that we've seen the money. And then again, mitigation here, right? Sorry, again, my drawing is shit, but you can see what I mean. Back into that next mitigation here. So mitigated this previous OB here. Again, we got a reaction. This will be a seconds time frame breaker structure. Push back in to mitigate, and then we got that very violent reaction that took out all this liquidity. Sorry, do that again. Took out all this liquidity above. Again.
You're using your left hand?
Yeah, no, I'll try to do this. There you go. That took out all this liquidity above. So I was like, cool. So from there, I just set my order. Let me move all this. It's clean. So from there, I just set my order at the open because the stop was only 1.5 pips if I had it at the open. And then yeah, just got tagged into the trades, and then price obviously continued. And obviously this was built off the narrative of we have equal highs stacked above here. And this aggression as well, and obviously following the money. So following structure, following the order flow, getting our sell to buy footprint, having cause to move higher, and that's enough to take the trades for me. And then obviously again we see tagged into the trade, and the trade took off, and we created liquidity here, and then obviously this is a weak low because we don't see any aggression, no break structure high as well. Sorry, weak high because we don't see any aggression, and then price obviously took that liquidity, created more liquidity, more cause to move higher from this high. Sorry, again, let's do it this way. This high here, and then all the liquidity that was stacked above here as well. Price then just continued and took out the equal highs, which is obviously what we was targeting, and that's how we took a partial from there. But yeah, that's all the trades from today. Quite a few trades that we've taken combined. Chuck's definitely took a lot of trades today. Was definitely in the flow. But again, just let us know your thoughts on this style of marking up.
So just want to So I hope our main goal here is to get that narrative across to you guys. So it's all it's all good and well looking at our markups and reading what we have on the screen, but on our markups are quite limited on what we can essentially say and what we can refer to. We have to be quite to the point. We want these videos to be a bit more of the thought process and how that narrative was built over time, showing obviously a much wider view of price delivery rather than just sending you this screenshot. So yeah, something we won't do all the time, but definitely something we want to start mixing in there. So again, as Burton said, give us your feedback. So I just want to, one more thing before Burton talks. Sorry, I just want to quickly show them. So
that was literally what I was going to say.
Okay, yeah, go on.
I was literally just going to say, obviously our long-awaited structure PDF is now out. We've spent so much time on this. We've literally spent ages just making sure that everything is as clear as it can possibly be from obviously our understanding combined, which is all on this sheet. So again, just take your time with this, really read into it, understand it, apply it to your own charts, and then if you've got any questions, make sure you ask.
Yeah, definitely. And the biggest task for us on this sheet was stripping out information because it was just way too much. We've done a lot of work to understand certain things. Some things we don't use right now, but we put a lot of effort. So the amount of notes, the amount of different documents and different sections that we had, we essentially started with all of that, and then essentially this kind of made it quite short and simple and straight to the point. Exactly how we using these concepts. Some of the stuff in here is basic, but hopefully we can still provide value in areas that you haven't seen before.
So thanks for obviously watching, guys. Just make sure you give us some feedback on this video, because obviously again this is our first time doing a markup video instead of obviously just a visual representation of all our trades. But yeah, thanks for watching, guys, and we'll catch you on the next one.
Thanks again. Have a great week.